Hi everyone, I'm Gavin and this is Cohen and we're the co-founders of Loaf Markets. We've just had some burning questions from our early believers and community since we've announced Loaf Markets and the general concept of what we're doing. We're just about to head into launch in less than by the time this video is out, probably already launched, but in less than a week. And so our team have compiled some of the questions from you guys, and we thought it would be great to help answer some of them. So let's jump into it. Okay, so the first question is, who are you and what is Loaf Markets?
I'm Cohen. I'm the co-founder of Loaf Markets along with Gavin here. And Loaf Markets is currently a tight-knit team of people united by the belief that property is inherently more exciting and inclusive when we're able to participate in a market which allows everyone to buy and sell at any time that they want, and they're not limited by the traditional high barriers to entry, such as things like foreign investment regulations and a $20 million price tag on your average luxury property. So we're aiming to break down these walls and really just allow your average Australian to buy into these things that have traditionally been gate-kept for centuries.
I think if I were to sum it up in one sentence, Loaf was kind of founded under the belief by the team that the world would be a more exciting and kind of equal place if property, the world's largest asset class, was indeed accessible, tradable, and liquid. And when you bring liquidity to something like property, there is unlimited potential for what the kind of financial landscape could look like. And I mean that in the sense of banks almost can become redundant in a sense, because before you were storing your value or your store of cash was in the bank, and now you can store your wealth in-house or in a data center. And with the liquidity that it provides, you're able to tap that with a debit card or send that to your friend as a form of currency. And so there's just that kind of potential there of that in the future as well. Okay, second question is, what problem does Loaf actually solve? I would say in two words, democratization and liquidity. The first one is access. So property has been the most gated asset, and that's for everyone from your average income earner to the top 0.1%. Obviously, with the high price tags of a lot of these properties in safe havens like Sydney or Monaco or Hong Kong, where the price to income ratio is hitting almost 15 times, affording these properties are basically impossible. And that also entails that you need to get a 10 or 20 year bank loan and give 10 or 20 years of your life to the bank and a mortgage. And so by fractionalizing and providing very frictionless access to these sorts of assets, you're able to get in with whatever means. And the second point of liquidity is, just because you fractionalize an asset, it doesn't mean it becomes a good investment. We like to say that fractionalization, aka splitting up assets into shares without liquidity, is actually worse than not fractionalizing at all. Because when you are buying into some asset without the liquidity of another party buying that off of you, or having the infrastructure that facilitates that sort of a thing, you're basically stuck in your position, or you can potentially lose up to 50% as soon as you've bought in. So we're just trying to create an accessible place into these physical world assets which have never been tradable before, so that everyday people around the world can get in, and with liquidity as well.
So why hasn't anyone built this before? I think this answer has kind of two parts to it. One of them is the access to such properties, and in particular the properties that are attractive to the everyday Australian. There have been some, attempts to do something along the lines of fractionalized property, but in general, these attempts have involved properties that aren't too great. And we like to say that just because a property is fractionalized, it doesn't mean that it suddenly becomes desirable. So an undesirable asset, is still undesirable even when it's fractionalized, and that's what a lot of companies in the past have done with their assets. They've just fractionalized these undesirable properties, and because they're undesirable in the first place, no one wants to buy into them or actually participate in the market when they have been fractionalized. And the second part is probably the harder of the two to solve, and that's the liquidity problem. And so traditionally, these fractionalized real-world assets have had very poor liquidity, and we're solving that by having our own in-house market-making system. So people will be able to buy and sell at tight spreads and not immediately lose 50% of their investment as soon as they get into the market. So we're solving those two problems. And it's not that anyone hasn't built this before, but they've tried and they've failed.
I think those 2 points are absolutely right. And the third main one is also timing. I think with anything that's new, you need the right factors in terms of where we are as humanity and where technology is. With the kind of burgeoning of like tokenization and RWAs and crypto and blockchain and this whole narrative of decentralization and bringing the world's assets on chain because it's frictionless and more liquid. I think that wasn't a thing 5 years ago. Like if you think back to COVID when, people were first getting I guess a hold of like what Bitcoin is, like people thought of crypto as just some speculative meme kind of thing, which, is not backed by anything. And so just in this short 5 years, the we as people investing in DeFi have like come quite far, and our understanding has come quite far as well. So I think the world is now more ready and able to accept a sort of product like this. And yeah, like Cohen said, without the properties, doesn't matter how sexy the concept is. In the end, the underlying property is still terrible. So we are setting out to actually do the properties that people want to do. And then after you solve the problems of procuring these assets, you need a way for the market to stay liquid and stay exciting. As I said before, without liquidity, it's worse than not tokenizing at all. So there is this layer of, after you're able to procure the good properties, you have to be able to create a product that stays exciting and relevant to people and allows people to take directional bets. Question number 4. What was your inspiration for creating Loaf Markets? I actually get asked this quite a lot, and this is both regarding the name and the actual concept. So I'll do the name first because a lot of people think the name is quite humorous and like little thought was put into it. But honestly, like I think that was the point of it, like to feel like that we weren't trying. And I guess I wasn't really trying too hard with the name because in the end, we wanted the product to speak for itself. Loaf is something that's humble. It's an everyday staple of life. And to me as well, there was this whole idea that a loaf is able to be fractionalized, it's shareable, and it's something that I think can represent something like a humble house, in a way that the other stuff that I thought of couldn't. And then the inspiration for actually creating Loaf Markets was this whole idea that, so first of all, most of our team were traders or like trading to some extent in different sorts of asset classes and venues. But property was the one thing that for centuries has never been touched. I think, with the advancement of technology, there has been nothing that's made this massive asset class like enter this modern world. And so we were like, why is this not a thing yet? And we're reading all into like tokenization and, artworks being tokenized, Banksy's and private credit and that sort of stuff. And so we thought if people could, create some kind of a market, even though if it's illiquid, for artwork, then surely there can be something that can be done with property. And obviously, like, as we talk about the legal stuff later, you'll get to know the legal stuff was quite challenging, especially in jurisdictions where people actually wanted to invest in property, like Australia or Singapore or Hong Kong. And we did partner with Baker McKenzie, which is, I think, one of the world's leading law firms in terms of like tokenization, this sort of stuff, to create the structure and the securitization kind of mechanism that is able to allow people to buy in frictionlessly. And once we got past that, it felt like, we were unstoppable. So thanks to everyone who's been early on our journey so far here at Loaf Markets. And we're very appreciative of everyone who's asked any questions on our various different platforms. We thoroughly enjoyed answering them all here. And if we haven't been able to, feel free to drop them in the comments and we'll answer it as soon as possible. If you like what we're doing and believe in the vision, feel free to join the waitlist, and we'll be rolling out beta soon. See you next time.